to one stock in focus, Updater Services. The stock is under pressure after reporting its Q4 numbers. Revenue growth came in muted sequentially, while the EBITDA margin expanded. Profit after tax jumped around 150% on a year-on-year basis. To discuss this, we have Raghu Tangirala, who's the chairman and MD of the company, joining in. Mr. Raghu, thank you very much for taking the time out. If you could just start by talking about the muted top line this quarter. Revenue was down around 0.7% on a Q-on-Q basis, though it was up around 10.5% year-on-year. Can you tell us the key trends that took place in terms of sales this time?
Sure. Thank you for having me. Yes, revenue was muted. We had actually reported this earlier also. We had exited certain contracts in both our business segments, that is the IFM segment and the business support segment. Those contracts were not very viable. So there's a kind of exiting businesses which I think was not adding value. So that's why it's muted. But however, all that will pick up from the first and second quarters of this year.
All right. So businesses not being viable has you exiting businesses not being viable has led to that muted performance in the revenue, so to say. But what's actually done well are your margins, because that is definitely working on your margins. The first quarter your margins were 5.7%, increased to around 6.3% now as we end this year. The overall margins for this year closer to around 6.3% in the fourth quarter. So what's your target then on margins? At what point do you seem satisfied with margins? And when does revenue start picking up?
From the first quarter, it would be slightly kind of 6-7% revenue pickup. But the second, third, and fourth, we expect to do anywhere between 15 to 18%, both on revenue and both on PAT.
All right, and margins stay stable around that 6.5% mark.
Yeah, we would aim for about 7, so that will be the numbers.
Okay. Can you give us an outlook in terms of the contracts in FY25 and demand?
We are on track to do that 15 to 18%. We have signed these contracts. But however, as I told you, first quarter will be slightly muted because it would take that time to ramp up. And then we will do that. We hope to do between 15 to 18%.
Right.
Okay, these contracts are all signed because they are all long-term contracts or medium-term contracts. That is anywhere between 3 years to 5 years.
Do you have any visibility or guidance that you can share Q2 onwards? You said Q1 would probably be a little tougher. Q2 onwards, are you expecting a revival?
Q1 we would do close to a high single digit, about 8-9%. Q2 will do about 17%. That is the visibility now.
All right, so 17% growth in Q2. 8-9% Q1 for the full year. You have a target of 15 to 18% of the top line. Let's talk about the verticals of the company then. I'm looking at both your IFM and BSS business. I just wanted to know, obviously it's the BSS business which has been growing a lot faster than the IFM business. What's the margin differential between the two? And secondly, what is the ideal mix that you would like from both these verticals for the company?
See, historically and also for this year and the next year, the mix would be about 40% average in terms of revenue would be the BSS segment, 60% would be IFM. And in terms of, if you look at, you ask the PAT margins or EBITDA margins in the BSS business in the range of about 12 to 14%. The IFM business would be in the range of 5 to 6%. The mix is right now 60-40. 60 in terms of revenue from IFM, 40 in terms of revenue from BSS.
Okay.
What we're trying to get at is what's your target mix change? Because if you want to improve your margins, you'll have to have a higher contribution coming in from BSS, right?
Yeah, that's exactly the plan. We will also do an inorganic, which we will raise money for in the BSS space. So we hope to have a 50-50.
Okay, so that's exactly what I needed to actually narrow down on. That was my next question. Was there any progress in terms of the acquisitions and inorganic growth that you're probably looking at? You had earmarked, I think, around 80 odd crores when it came to M&A, and you are looking at the BSS vertical. So anything more that you can share with us at this point?
I won't be able to share anything now. I'm constrained to do that. But what I can share is we are very actively talking to a couple of target companies. We should do something in the next 1-2 quarters, definitely.
Okay. What would the size be?
We are actually also call that out. We would look at, instead of size, we would look at adding anywhere between 15 to 20 crores of PAT.
Okay, 15 to 20 crores of PAT. You said that.
So I'm not talking the top line, we don't know that. But the intention is to add 15 to 20 crores of PAT by way of inorganic growth.
Got that. And what about this loss due to unviable business that you started shutting? I mean, is your portfolio now completely rid of these unviable businesses, or you still have some which you may have to shut?
No, absolutely, we're clean.
So how do you define unviable businesses?
All the unviable business, we are done with it.
How would you define them? Are the ones that they're making losses?
We would define anything not able to give us at least that whatever margins I told you between 10 to 12% or 13% basis, about 5-6% in IFM. Anything below that, to a large extent, anything 20-30% below those margins, we will exit.
And none of your businesses are right now in that range, right? You've exited all of them.
Yes, that's why we're confident of doing that. I said 5-6% in this space and about 12-13% in that space.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the word coming in from Updater, that stock in focus. It's a recent listing as well. I think the issue price was around 300 odd rupees. We'll take a short break.